Hello to everyone. Today it's January the 8th of 2017. I'm getting back of doing the weekly videos. I think it's add value to my analysis as well as some of my subscribers that have mentioned and emailed me why I stopped doing it. The reason was that I was doing a lot of other stuff on the weekends, so I was really busy programming and testing new systems. I am back to it, and I will probably publish regularly, and we can see in front of us. Let's go to it. The recap it's going to be short, probably 6 or 7 minutes, and the bullish momentum into 2017 continues. You see all the stock markets, the major indexes around the world are all positive. I mean, the biggest one is Nasdaq, and then here in some Europeans, but very much about 2%, actually close to 3% in Nasdaq. Brazil is after 2 bad years. Last year was very good for them, and this year started quite strong as well. Of course, the real is helping. Let's go to the chart itself with S&P 500. So in the long term, let me go here. In the long term, we have this major bull trend since the lows of 2009. So we're far away from the trend line. Can we come down? Yes, of course, but the the trend is still intact. We had a cross on the MACD here. This was in what we can call the Christmas rally, in the late part of the Christmas rally, but we continue to go, and we closed at all-time highs. Actually, this is weekly highs, all monthly highs, yearly highs, all-time highs for the S&P 500. Similar thing for the Nasdaq. Let me load the Nasdaq. Here in the long-term charts, all-time highs. Oh, sorry, Nasdaq didn't load. NDX. In the long term, so the trend is still intact. We could draw it from the bottom. Oh, let me do it here. Okay, still intact. Yes, we had a lot of consolidation here in 2015, but as you can see, we closed at the highs, and we had this week the MACD cross confirmation with this little push. So the Nasdaq is at 5,000. The Russell as well. Let me see if I have the Russell. I don't have the Russell here. Let me load the Russell. This is the Russell. It's not at, it is at all-time highs, right? But it did not close at the highs of the week nor the month. So, but still, I mean, this, can it come down? Yes, of course. But is this a pattern to short? Not yet. I mean, for me, it's not a pattern to short. I mean, it's building a flag here, consolidating here. It had tried to push in this level. It failed. So let me remove this. Every trend that had to break 1354 fell. So can it break it? Of course. Can it consolidate a little lower? Yes. Is this a pattern to go short? Not for me. I mean, there are many stocks, strong stocks going higher that we're going to review some. This is Signal from Icon. I mean, I really like it. I like it because it saves me a lot of time. I mean, look, let me give you some examples I'm looking at. For example, Apple, it closed about the 14-day simple moving average, 14-day simple moving average, and it has been doing it for the last December. It closed far away from the bottom of the wick. So I'm looking to see, you see what happened when it closes. It keep pushing higher, higher, higher. It's not that it's going to be a huge move, but it gives me support and confident that if it start pushing lower, there's an option for a trade there. Here we have Amazon. This is 3 consecutive days trading higher. So I'm looking here as well, closing far away from the bottom of the wick, and looking to go for a long on Amazon. And let's see, Facebook also see a good example, 3 days closing higher. This could be overextended, but it broke this trend line here. And let me go, if I put Facebook on the chart, it's here, you see, you can see here how the MACD is still with the selling pressure, but it broke. It's about to break the consolidation in the bottom, and if it breaks 125, this could turn into 130 quite quickly. So I'm looking for this. Another example in the long side. I mean, another reason I like is I follow 612 stocks, and you can see about 110 are making 3 days consecutive rise, and only 20 are 3 consecutive days falling. So this is one of the reasons I enjoy. It saves me a lot of time. Now I want to give another example. Let me see if I find. Google and Expedia. Here's Google. It's not at all-time highs, but it's really close. It's really close. So we can see that the momentum is building up, and yes, it's true the MACD is not extremely bullish, but it's there. Another example, let me show you. It was a bullish one. Okay. So we can see here how this trend line held, right? Let's see if this trend line here, and here we have another speeding. It's like speeding, right? It's every time it's a little faster and faster. So it comes down there, it shows the buyer, and you can see the same here with the MACD, right? So it's holding. Now we'll see a cross here sooner than later, and this is another buy candidate. I mean, if we see in the long-term chart, I mean, this stock was trading at 7 in 2009. Now it's at 120. So of course there is a big ceiling here at 130, but from the 115 or 120, if we get them here, then the 120 we can see on 130 before the bears try to push it down again if the momentum keep going. So this is all for today. I don't want to make it really long. So for the recap, we had a good year last year. Let me show you custom. We can do from January 1st to December 31st. We can see all the indexes. January change. Update view. So here we could see how the index is finished. The S&P 500 finished last year around 10% return, and the UK, because of the British pound, finished about 15%. But some of the European were down. I mean, the Euro stock overall was negative, and in Asia, yes, Australia was positive, and the Hang was barely flat in local currency. Okay, so yes, last year was good for North America, for the Americas, especially Brazil. It had a very strong year, and actually this year started quite strong as well. And for Europe was mixed. Some countries did okay, but I mean the DAX, Germany didn't even reach 10%, so it was quite flat. And other European countries like Spain was in the end was -2, but it was much lower in November. And then Asia finished flat very much. Given the volatility of these markets, we expect a lot higher return here. So that was all. I mean,